to the Weekly Governance Voice. Glad that you have joined us. These conversations are for you to ensure that governance and everything that comes around it becomes better and better for our beloved country. Thank you once again for joining us. Today we host CS Kuria Waithaka, a man with a lot of experience, and we're going to talk about integrating ESG, law and corporate strategy in the capital markets. The reason why I said about experience is because he has been long enough at the capital markets. CS Kuria, welcome to the show.
Thank you very much, Waina, and thank you for having me.
Yes, it's good to see you. And I think it's good for the viewers to know that first time I met you was actually at the Nairobi Securities Exchange, and you were very busy doing this work that we're talking about.
That is true, that is true.
Excellent. Yes. And maybe we could get straight to the conversation. And the first question I wanted to ask you is how you define intersection of ESG, law, and corporate strategy. How do you say that in a nutshell?
ESG, environmental, social, and governance factors.
Yes.
To my mind, are what we call a strategic imperative, meaning that they have to be embedded in a strategy.
Yeah.
Any organization worth its salt, which has a strategy worth its salt as well, would need to embed ESG practices and metrics in its strategy and monitor them. Wow. So that's where just to show that strategy is very critical, of course, to a company.
Yes.
ESG must form an essential part of that strategy.
They need to be at the table.
They need to be, exactly. The ESG used to be a buzzword.
Yeah.
People thought it was a bit of a fluffy concept, but now it is something that has been shown to add value to corporate entities. Now, there's another element of law.
Yeah.
Now, how law comes in, the intersection with law, is that two aspects. One is that even as ESG has been embedded, ESG practices have been embedded in the corporate organization, the corporate organization still has to adhere to certain laws, regulations, and policies that govern it.
Absolutely.
So there's that compliance aspect.
Yes.
Then there's also another element of the law side of things,
the
legal side of things, where there are regulatory frameworks which mandate or which require that corporate entities embed ESG practices in their business processes and report on them.
Okay.
So that's where the integration then comes in, that they're all intertwined.
Yes,
in some way or other, but critical.
No, great
as a strategic imperative.
Yes, great context there. Thank you so much for that. You have a lot of experience when it comes to listed companies, especially when you're the helm of the Nairobi Securities Exchange. And one of the things that probably would help even build this context is to ask how listed companies currently are integrating ESG into their business models and corporate strategies. How would you help us even understand further using your experience?
A couple of elements come into play.
Yeah.
One is integrating ESG practices and metrics and parameters into one's business operations, meaning that build this into the supply or value chain of the company. If it's a service you're providing or if it's a product that you're manufacturing, ensure that you have sustainable practices that are embedded in that in those processes, such that ESG is then is integrated in those processes.
Absolutely.
How you manage your suppliers, for instance, it's important that you treat them in ways that meet the threshold of the ESG principles, especially, even environment, but even social and governance.
Yeah.
In addition, another critical component is reporting. What listed companies are doing is that they are now reporting on how far they've gone in terms of implementing various ESG standards.
Yeah.
And there are a number of global frameworks and standards. So listed companies are, like in Kenya, are embracing that, and by virtue of reporting, that's one way of integrating ESG.
Okay.
Now you also report based on policies that you have in place.
Yeah.
So put in place various policies, maybe on diversity at board and management level, on your supply chain, management, waste management as well.
Yeah.
How you're going to reduce the carbon emissions. You need to have policies on all these matters.
Okay.
You need to have policies on how you treat your employees, which is an ESG matter.
Absolutely. The social part.
The social part.
Yeah.
And then governance. You put in place governance documents. You formulate governance documents and put strict and robust governance measures in some of your documents, whether it's your board charters, whether it's your committee terms of reference, at the board level, and even at the management level, put in lock-in provisions that enable ESG to be can I say, to be implemented.
Absolutely.
But I've just remembered that, it's important even from a staff perspective.
Yeah.
Remember, we said ESG is a strategic imperative. So a strategy is at the global level, but it flows into work plans and action plans.
Yes.
And targets.
Yeah.
Now give employees or your staff targets that have ESG components in them.
Lovely.
So that's how I see some of the ways in which ESG has been integrated in various business operations of listed companies.
Excellent. Yeah. Quite something there, there. And I think there's a lot of takeaways. But even for our viewers, remember, we have had a conversation about governance. So you can go ahead and listen into some of those things that even CS Kuria has touched on for even a deeper, lengthy way of understanding this. And let's talk about investors, because there's a notion that has been put across that, as you integrate ESG into your organization, there's a role it plays in attracting investors and also driving long-term value creation in the capital markets. Could you expound a little bit on that?
Capital markets are about some aspects of capital markets entail investing in companies, like buying equity stakes in companies, shares or stocks, as others may call them. Now, this is done by investors.
Yes.
Owners of companies, the members or shareholders also known as investors because they're investing in the company. Now, what would draw an investor to a company? When it comes to, before it was financial performance solely, really. They were just looking at what we call the bottom line, the profit part of things. But now, as the world is evolving and there are new elements that come into this space, like being the climate resilience aspects, environmentally sustainable, taking care of your staff, taking care of your stakeholders, the public, the communities in which you do business. Investors are now becoming more, savvy and more wary of these aspects. Because we all appreciate that we're in a globally changing world. And with ESG, which is upon us, what investors are doing is they're now looking at companies in terms of how well embedded or entrenched are their ESG practices. And if they have such ESG practices, an investor, especially, because investors are all over the world, but we also have sophisticated investors who say, I want to do something that's, I want to invest in a company that's socially and environmentally responsible.
Yeah, you're right.
And as such, then they start looking for that kind of company. So if your company has a strong ESG status, if we may call it that, investors will be more attracted to that. Because for one, they say that you're obviously kosher in terms of you probably are meeting all you're complying to all laws and regulations that govern your business. Two, you're taking cognizance of matters of the environment, matters impacting the environment, and that you're conscious to put in place measures that mitigate any further, deterioration of the environment. And that promote conservation of the environment. That's something they're looking at. Then they also look at how you treat people. How you treat back to employees. Who are
social
your
footprint.
Yes. How you treat your suppliers. How you treat the communities that you sell your goods your goods to or provide a service to.
Absolutely.
So investors are attracted to that. So what this does for the company is that first there's a brand reputation consideration. The more ESG stronger you are, the more your brand actually goes up. In terms of the trajectory is good in that way. In addition, you have access to new markets as a company because, first of all, we're talking about listed companies. The fact that you're listed means that you meet certain thresholds, showing that you're kosher as a company. You're good to do business as a company because you've gone through certain regulatory safeguards, put it that way, to ensure that you're doing business the right way, at the right time. So investors are attracted to that. And don't to know that you're a company that's practicing good human rights, or that's promoting human rights.
Absolutely.
That is taking care of the labor aspects of your staff. That is safeguarding the environment. To the extent that you can, especially like if you're in a business that uses a lot of water, maybe you're providing water for communities that you're taking the water away from. Things like that. And so investors have become savvy in that regard.
All right. Thank you so much for that. And I know there could be more you could share. We're trying here to summarize.
I will try.
And actually, as you were speaking, you've just reminded me, at your time, when you were still company secretaries at the Nairobi Securities Exchange, there was a company, we may not name a name, that got into trouble simply because of their social part. And where they were operating, there were certain things that were happening and it impacted on the investors that have really looked into them, and they had to do a lot of work to ensure they get back to this.
Exactly.
Very important. Let's talk about the legal frameworks that exist or regulatory guidelines currently that exist to support ESG integration in the capital markets in Kenya or even at the region. Are there some?
Yes. I guess let's start closer home.
Yes,
because
right here.
We're here in Kenya. We're talking about, and as much as our audience is global, I'm sure. So in Kenya, we start on the regulatory side of things where we have, we have a couple of frameworks, we call them that. We have the Capital Markets Act, which does, that's Cap 485 of the laws of Kenya. 485A, sorry. It does talk about various aspects of disclosure with regard to sustainability and especially corporate governance.
Okay.
Not too much in there. What you get a bit more in some regulations, for instance, those known as the Public Offers Listing and Disclosures Act, which has what we call continuing listing obligations of issuers. And even if one wants to be a potential issuer, there are certain disclosures that must be given. And those on corporate governance are really stressed and reiterated in those regulations. And the regulations also then make reference to a certain code. Okay. Because these regulations were amended, they were revised in 2023. I think that's the latest revision. They do talk about having to meet, to ensure compliance with a certain code, which was again, formulated by the Capital Markets Authority of Kenya. This code is known as the Code for Corporate Governance for Issuers of Securities to the Public. Which was formulated, which was issued in 2015. Went live in 2016. Issuers of securities to the public. Those are listed companies. So it's a framework, a code or guidance material, which is purely for listed companies. Therein are very many provisions on what listed companies should do to embed the best ESG practices and processes and policies into their operations. There are various aspects. And in fact, the terms sustainability will be mentioned there. Environment will be mentioned in that code. Corporate governance is big, especially.
Absolutely.
Because to your point, everything revolves around governance, actually. Environment is important. Very important. A lot of focus has been on the E. Not too much sometimes on the S. So this, and then there's a G. The code emphasizes quite a bit on those elements, especially the S and the G quite a bit. And has provisions which listed companies have to abide by. The principle of this code is apply or explain, meaning it's principle based. Previous frameworks used to have this aspect of comply or explain, which made it sound mandatory, almost like you're being forced to do something. And if you don't do it, there'll be sanctions against you. But now then it was rule based. Now it's more principle based. So put this in place, and you see the value that it will add. Last I can mention maybe just on the code is that there's a reporting matrix that must be put in place, or must be a report that must be made to the Capital Markets Authority by 30th of April every year. Meaning, what as a listed company have you done to implement the code provisions in the preceding year? And one of the questions that there are a couple of metrics or parameters on sustainability and ESG, and how a company has to indicate how far it has gone in implementing the ESG provisions as are required by the code.
No, lovely. Did you have one more thing? Go ahead.
One more point on that. And the other frameworks, but anyway, I had one more point. Go ahead. As well, there's a governance under the code. That same code we're talking about. People call it the CMA code. There's a requirement for listed companies to undertake what they call a governance audit periodically. It's been moved. It's depending on how strong you are in terms of embedding your ESG and your governance structures and in place. You've given up to even 2 years. Some companies maybe even 3, but right now it's about 2. You've got to report every 2 years. Do this audit every 2 years. One of the key aspects of that audit now is your sustainability practices, but especially in terms of ESG. What's your ESG status as a listed company? What are you doing to further integrate ESG into your operations, into your structures, into your business? So that's a critical that comes out.
No, lovely. As you can tell, there's a lot that can be shared, definitely. But since we are really touching on the surface, and for the viewers who are there, CS Kuria is a man who's available for even further interrogation if you want proper advice as well under the ICS. That's why we exist, to help out companies. How do you see internal governance structures evolving to to support ESG ambitions in a nutshell?
Yes. Again, as a strategic imperative, we're saying ESG is a strategic imperative. What companies are doing, or how this is evolving, is that corporate entities are finding themselves having to put in place, as you have an ESG strategy, there are certain components of that strategy which include coming up with the policies, as I mentioned earlier, like ESG-based policies. Now, policies have to be implemented by somebody, because from policies come plans, action plans, maybe annual plans. So somebody has to oversee that. So what organizations are doing is that they're now creating the roles of ESG leads, who could go by various names: ESG officer, chief sustainability officer. I've seen a number of listed companies and organizations that have that kind of role. And this is a role that specifically monitors the ESG performance across the organization. Recall that ESG will have been embedded in the strategy. There will be certain metrics that will be assessed and measured, and targets that are derived from that. So this role would be monitoring how the company is doing in that regard, and then making reports. And reporting lines are actually now at the board level. So again, what companies are doing is that they are now having specific ESG committees, or committees with ESG terms of reference. Or for those who then find that maybe a challenge in terms of maybe the numbers that they have at the board level, in terms of head count, if I'm calling that, or even maybe from a finances perspective, they're trying to manage the finances. What they do is that they embed or incorporate ESG terms of reference, or scope terms of reference, into existing committees, which have a sort of tie to what they're doing. Whether it's a strategy committees, summits, maybe the audit committees, because remember, you're monitoring performance. Different companies have different kinds of committees. So, but ultimately the board is responsible and must own the ESG agenda in a company.
I love that.
So now the board has to receive reports, and then they interrogate these reports and they give guidance. Because remember, anything that goes out to the public, to the stakeholders, has to have the blessing of the board, has to be sanctioned by the board. So even for ESG purposes, as ESG reports are being done, or ESG content is put in integrated reports, the board has to own that.
Absolutely.
So again, these are the kind of structures that are being put in to just ensure that the ESG is implemented.
Okay. This is a class. And I love how it's going. It's interesting. I would want to ask you, because I was in a place where we're having conversation and saying the world is almost dividing out, the global north and global south. And the global north seems not to really appreciate ESG. I don't know, with the leadership changes that we see. I'm talking about Trump and the like. So I'm sure you're very much aware of that. But how do you envision the future of ESG here locally in the capital markets, let's say 5-10 years from now?
A couple of things come to mind, and I'm glad you mentioned the global north and the changes that are happening there with the leadership at that level, because actually it's not as much as I said we're a global. We're discussing here, but ESG is global.
Absolutely.
And listed companies also operate. Their customers could be here, could be global. Investors are global as well. So things that happen even at the global level affect us here at our national level.
True that.
So anyway, and I'll come to that. So a couple of matters. I see more stringent regulatory reporting or mandatory reporting of ESG that's going to happen in the next 5 to 10 years. It's already starting to happen. Like in Europe, there's a particular standard for mandatory reporting under a certain framework that is taking effect from 2025. Mandatory reporting on ESG. So under that framework, it's happening from 2025. That's going to be the trend. So you'll find now, instead of applying or explaining, it will be comply. You must
comply.
It's not the best way to do it, but that's the place where we are at the world, that we must do these things. It's imperative that we do them. So mandatory reporting is one. The use of what we call tech, big tech, AI, artificial intelligence has come into this space in such a big way. And blockchain, that you're going to see more interfaces in terms of technology at play, in terms of how ESG is implemented,
yeah.
how it's measured and assessed, and how it's reported upon.
Okay.
So there'll be analytics. Analytics are already happening. There are
yeah.
already ESG analytics and rating companies that are already in place.
Mm-hmm.
You'll see more of those coming in
okay.
and employing AI. Companies themselves will employ, so will all these other agencies. AI, blockchain, large language learning modules,
okay.
and other new tech that are with us.
Absolutely.
Another one is products.
Oh.
There'll be innovation in terms of products that are, can I say, sustainable. That are sustainable. Products that are sustainable in a sense.
Okay.
Let's put it that way.
Okay.
Sustainability linked products.
Yeah.
There's bound to be more innovation in that regard.
I like that you're touching on innovation. In fact, just mix it in. Yes, go ahead. Yeah. Uh-huh.
Yes. I mean, right now we have green bonds, which are in place, for instance. And even in this part of even in Kenya, we have a
very successful
successful green bond.
Yeah.
You're bound to see more of that.
Yeah.
I actually hope there would have been more by now.
Yeah.
But I think, as I said,
in fact, allow me to say the first inaugural one. You oversaw that.
I'm proud to have been part of that process.
Yes,
yeah, thank you very much.
Yeah.
So green bonds, you'll have things like gender bonds. You'll have ESG themed exchange traded funds, and there are already some coming up.
Yeah.
But they'll become more of the in thing in a sense as we move in that regard.
Yeah.
Now, just to your point, you mentioned about like changes, especially in the north and certain countries.
Yes.
You'll be surprised. One of the things that's happening is that there's a concept called hashing. HUSHING.
Okay.
In quotes, that's coming up.
Yes.
Meaning that companies are still adopting and embracing and implementing ESG practices and policies.
Yeah.
But they can't do it too loudly.
Oh.
Because the administration may not be
in favor
or amenable. You heard about matters of diversity, equity, and inclusion. Certain decrees were, made, proclamations were made in that regard that do not appear to be supportive of that agenda.
Yeah.
But companies still know and want to do it.
Yeah.
So how do they do it? They do it, but quietly, and communicating in such a way that it does not offend the authorities, as it were.
In a harsh way.
Yeah, in a harsh way. That's why it's called hashing. It's actually it's a concept in the US called hashing.
Yeah.
And they've even gone further and talked about green hashing.
Oh.
Because you've heard of green. I don't know if you've heard of greenwashing.
Yes.
But there's green hashing on matters of environmental matters.
Okay.
Maybe as they may not be. You may find that there's some elements who may not be too much into this whole global environmental conservation aspect.
Yeah.
But companies still believe that it is the imperative to do them.
Yeah.
They will still continue having sustainable practices, especially even environmentally, but they cannot say it too loudly. So they are green hashing.
I like that. Thanks for that.
And then the last point is on greenwashing.
Yeah.
Again, greenwashing is where you use deceptive practices as a company.
Okay.
To maybe come up with products or services,
or
even even products, even financial products, for example, in the capital markets, which appear to be green in that they are the purpose for which the funds that are being invested in that project are towards an environmentally and socially friendly purpose.
Okay.
So there are companies who do that to attract money, but they really do not mean, their consciences are not clear in terms, or the intentions are not clear in terms of that. So that's the aspect of greenwashing.
Okay.
This project looks environmentally sound and it's going to help the environment, but really in effect it does not.
Okay.
So there's bound to be more regulation, and it's happening even especially in the West, the global North as you called it, on regulating more of those aspects of greenwashing.
Okay.
And there's a lot more. The trends are looking interesting actually.
I know, right?
I've done quite a bit of research on this. It's looking quite interesting. Yeah, there's a lot more.
For the greenwashing guys, we need to tell them where I come from, Washindwe. Thanks so much for that. In closing, Kuria, it would be nice to understand what roles the body like ICS, where you are now serving as well in the council, can do. What can they do to ensure that we are advancing ESG integration? And maybe you also tie it in with your final thoughts to anybody who is watching here today, how the governance professionals can help bridge the gap between compliance, strategy, all these things we're talking about for value creation. Tie those in 5 minutes.
And I'm glad you use the words governance professional.
Yes.
Because the ICS, our slogan or our mantra is the governance professional.
Absolutely.
So by virtue of that, governance is a G in ESG. But the three are intertwined. The E, the S, and the G are very intertwined.
Absolutely.
So what the professional bodies like the ICS, of which I'm a member, can do and probably are already doing, is there's a main aspect of, because it's a professional membership organization.
Yeah.
So help train, capacity build. The issue of capacity building is critical for professional bodies, because you probably are a repository of knowledge, maybe of that particular area. So train your members, and then also train others outside of your membership. Your members can even be trainers. You train the trainers, come and train the rest of these aspects, like emerging areas of ESG, the trends we're talking about, best practices like in issues like governance. So there's a capacity building aspect.
Absolutely.
As well, like again, I'll focus on ICS because we interface a lot with the governance processes of organizations, and even in listed companies. We sit in the boardrooms. We interact with the governance structures, the board members, and all. We are such a critical cog in ensuring that the right information gets to the board and to the organization. So if we're sufficiently upskilled and our knowledge horizons are broadened in terms of ESG, we then give advice that is sound to the boards on the benefits and value add that ESG brings about. And we also, like in the compliance environment that we're in, we also guide and say, this we need to do. Not only we need to do it because it's a regulatory requirement, but it's also important because this is the way this is going to sustain the business for it to thrive.
Wow.
So those are another aspect is advocacy. As I said, the world is again moving towards regulatory frameworks, and there's a lot of emerging areas. Data analytics, research, trends, frameworks. The reporting frameworks. Bodies like this, since they have, as I said, they have expertise. They can also there's policy guidance and advice and advocacy that they can do. Engage with key stakeholders like government. And just guide them or support government in coming up with the policy documents and frameworks that work for the industries that they serve.
Lovely. To the professionals now, what would be your final word? They must get some piece of advice from you.
The professionals, which I said I'm also one. We have a duty. We have a duty as we have a duty as professionals to ensure that we are the ones at the heart of helping companies, corporate entities. In fact, not just corporate, everyone actually, any entity, to embed environmental, social, and governance practices and policies. It's been a strategic imperative. We're the ones who can advise on that. We have to come in and advise on that. So it also means we also have to upskill. We have to research. We have to have the knowledge. So let's do our research. Let's look out. The information is available. That's a good thing in this global world that we're in. And embrace areas like AI and blockchain as well. Nowadays I'm typing at something and an AI assistant comes and I'm like, oh, what do I do here? But now I've now learned, because I've seen that so much, it's become part and parcel of us. So embrace these new technologies and use them to try and create more efficiency and effectiveness in the work that we do as professionals in our various spaces, whether it's as corporate, as certified secretaries, whether it's let's say the accountant bodies, for instance, like ISPAC. And all these standards that are coming, we're the ones who will help embed these standards, especially for reporting purposes. We can help shepherd those processes.
Excellent.
So we have quite a critical role to play in this.
Ms. Kuria, thank you so much for gracing us here at the Weekly Governance Voice.
Thank you. Thank you.
Asante sana.
Thank you very much for having me. All right.
Absolutely.
Looking forward to engaging again.
And there's so much we could have covered. We may need a part 2 on this, but really, I hope you've gotten something out of this. And remember, if you have any other questions, reach out to us. The ICS, this institute, is here for you. Thank you so much once again. That has been a conversation on integrating ESG, law, and corporate strategy in the capital markets, and even in general, because we also talked about other organizations as well. So make sure to subscribe and to always tune in. Thank you so much, and bye-bye.